Hi, good morning. You're watching The Market right here on ET Now, and let's say hello to the month of June, not the calendar month, but a new series altogether. And it was an interesting trading day yesterday as well. We managed to see an uptick of a good 100 points actually from the session lows within the last final 90 minutes. But yes, it was the most sedate of expiry days that we've seen in a very, very long time. Good to see that the broader market liveliness continued, and yesterday as well, it was no different. The broader markets managed to outperform what the benchmarks did. And yes, FIIs continue to be buyers in this market. Fourth straight session of buying when it comes to FMCG, many stocks sitting at a new high, the index as well at a new high. But the laggards, they were PSU banks. But clearly, it's a sign that there were dip buyers, and at any given dip, you will see a rescue coming in.
May was very different from April, and I think June would be very different from May. What were the high points for the month of May? More than the Nifty or the Bank Nifty, it was the mid and the small cap stocks, the list of 52-week high, the combination comeback by the retail investor, open interest addition by FIs and by DIs. Those were the highlights. The reason why June could be different is because for markets to go higher, you need a combination of three factors. You need a trigger, you need an event push, or you need liquidity. There are no large calendar events, both locally and globally, in the month of June. And there are no triggers which could also generate upside momentum. So then markets would be relying on technicals and on liquidity. On the liquidity front, everyone knows that markets have, FIs are back and DIs are here to stay. But for markets to go higher now and sustain new high levels, you need a new push. And I'm not so sure that where that new push, at least in the next 10-15 days, would come from. So I don't think there is anything damaging in the market. I think the summer rally of 2023, the bulls are just taking it easy. You will definitely, if you want to lean on the upside rather than on the downside. But the price action and the appreciation, what we've seen in the month of April and May, the pace is something which I think is reducing, and I think it is evident in the way how the FI positioning is moving. So what do you do in this market? Well, if you're long, you stay long. You don't cut your longs. You don't go short. But to assume that this is going to be like one of those months where you're going to get another 4-5% on the Bank Nifty, 2-3% on the Nifty, I think would be a far cry.
We've already seen outperformance though in the last two series. April, remember, the index itself was an uptick of about 4.5%. In the month of May, we've seen returns of about 3.5%. And if you talk about the Nifty Bank as well, in the month of April, that saw a big jump of 7.25% actually, though in May it was a lot more tempered, 2.5%. So let's see what banks actually do and whether they can push the markets higher, because FMCG, unfortunately, while it's been one of the biggest gainers in the series gone by, that doesn't have as much weightage as banks do. So let's see whether they can pull the trick or not. But yeah, Avan, having said that, a lot of stocks at 52-week highs.
And actually within the FMCG space, who would have thought the most memed stock, the stock that really got a battering from a lot of shareholders, has done nothing but seen a wonderful journey since the start of the year. And that is ITC, hitting its 52-week high. It's set to continue its fifth consecutive week of gaining streak. And it's been the best performing stock as well in the last 1 year, gaining about 60%. And then added to that list, there's also Britannia within the same sector itself, and another Nifty gainer has been Bajaj Auto. Nikunj, what do you have to say about some of the stocks that have had a terrific run and now are perched at life highs?
No, so it's a nice smart combination, with the exception of, let's say, you take out the IT index. I think rest of the market is quite vibrant. Let's look at that list: Nifty 50, Bajaj Auto, Britannia, ITC. It's an auto company which has made right up there. It's an FMCG company which has made it right up there. Look at the stocks within Nifty 500. Delta Corp, hello, who would have thought Delta Corp would actually be right up there? You got an NBFC stock, L&T Finance, GSPL, IDFC, which is the holding company of IDFC Bank, NBCC, it's a construction company. So the good bit here is, and this is what I think would be the highlight for the month of June, is that markets are rotating wonderfully well. If Nifty moves in this range, which I think is evident, I don't see there is anything negative in the system which will really break the markets down. If at all, I think domestic institutional investors will now be inclined to buy into more mid and small cap stocks because they were sitting on cash and they have to catch up. I would imagine that the month of June really belongs to A quality mid-cap stocks which would be propelled by retail, HNI, and by domestic institutional investors. It's very good what's happening in the market. The list of 52-week high, it's not just restricted to a sector. Normally what you would say, IT chal raha hai. You would say price action in defense. You would see price action in large banks. That's not the case. Bajaj Auto, Britannia, ITC, nothing in common. So I think that's a good bit. And the reason why that's happening, Aisha, is because domestic institutional investors are sitting on cash and markets are going higher. They have to catch up. So I think they are coming back. Retail investors, they also know that monsoon, that's not a concern any longer as of now. The flows are back. So they are also trying to jump on the momentum, so to speak. So I think the month of June would be sectoral rotation, new sectors coming in, and you would see quality mid-cap stocks really flying up.
Yeah, absolutely. Okay, well, talking about a global counterpart, that's Wall Street as well, and look at the kind of mood that you've seen over there. Individual companies making fresh highs and taking actually Wall Street higher than that. Look at the gains, for instance, about Nvidia, which is world's largest semiconductor chip maker. Now, up until last year, it was all about auto components and how semiconductors actually come in use for that industry, but well, not. It's also artificial intelligence chips that is why these companies and semiconductors are further in demand. So look at what Nvidia has actually done. The stock has rallied 38% after the bell overnight and has added $200 billion to its market cap. So clearly giving a big leg up to the Wall Street price action as well.
It's $1 trillion company now. And how many $1 trillion companies are there in the world right now? I mean, you have Apple, you have Microsoft, there was Alphabet at some point in time, there was Amazon at some point in time, but here's a chip manufacturing company which, frankly, if you ask me, everybody knows Amazon, everybody knows Apple, everybody knows Microsoft.
No one knew Nvidia.
Exactly. I mean, I struggled till about 2 years ago just to get the pronunciation right. But the fact that Wall Street is telling you that we are backing a company which is in semiconductor and artificial intelligence, what it means for Indian companies, nothing, because you don't have, Tatas are planning to make semiconductor, but that's a long haul process and that's going to be part of a private entity. You don't have any direct play per se. But indirectly, if semiconductor manufacturing picks up, then you actually going to see a huge change in terms of supply chain. You will see a huge change in terms of how the manufacturing activity would move. So let's look at it this way. India is not going to be making manufacturing. India will not be able to move into a very high pedestal positioning in next 3 years in terms of chip manufacturing. But in US, you know that post-COVID, they've learned the importance of becoming self-reliant in chip manufacturing. If chips are manufactured more, who will benefit? Auto companies, manufacturing companies, and especially sectors like electronics in India and EMS, what we call them. Largely that's because if chips are available, a lot of supply chains would change. And I think that China 1 plus strategy, which is what markets are betting on, I think is evident now in some of the niche manufacturing players. So chip manufacturing industry coming back means the supply chain in the world would change. Chips which are going from Taiwan to US and from Taiwan to China now would be America to India.
Yep, and that did see the stock price as well of Nvidia, as we highlighted, really jump, and that led to a pretty decent move on Wall Street overnight. Although for the week gone by, it is likely to be a bit muted for the indices. Asia as well seems to be following that cue, and the SGX Nifty is a little bit muted. Of course, we're monitoring those debt ceiling negotiations, and you've also got the bond yield, which is at about 3.8%. But that aside, let's focus in on commentary back home. We interacted with Prashant Jain, Director 3P Investment Managers, and he sees a further scope of re-rating within the power sector. Where exactly does he see value? Listen in.
So I think one space which has also got re-rated, but I think there could be still some scope for it to get re-rated is the power sector. Because go back 2 years and ESG was a very live theme. And the world thought that you can transition from conventional to new energy overnight. And we have discussed this number of time, that was not a very realistic view. But I think people have come around to that view that conventional power is here to stay. And world over you are seeing what is happening in the power space. Even in India, it is now possible shortages of coal or power that make the headlines. And recently, I think there were some reports that we are likely to announce fairly large new conventional power plants. So I think India, as I have always said, India's per capita power consumption is extremely low, and power represents a growth business in India. And also, I think some of the incumbent companies, their quasi-sovereign status gives them a significant advantage when it comes to borrowing. And whether it is in conventional or in renewable power, the cost of borrowing is the biggest delta between two businesses. So I think the widening of spreads globally and even in India to some extent, I think has enhanced that competitive advantage. So I think these utilities are still not trading like growing businesses. So I think there is still some room for re-rating to take place there.
Stock market technicals. We start a brand new series. Will the momentum in the month of May, will it continue? Now we're starting the May series, let's point it out, with the premium positioning. So it's not like a featherlight series. Retail is back, FIs are back, DIs are back. So there is no surprise element in terms of a liquidity trigger. Now you got to bear that in mind. But Nifty in last couple of days, maybe range bound, borrowing, going up and down. But when will we see a decisive trend? Naresh, good morning. Are we in for a decisive trend this series, next 10 days?
Good morning. So I would not be in that expectation of a say a move towards 18,800. That would imply a fresh trend till the time we don't get out of that debt ceiling issue in the US, and that continues to be a problem. We've seen that volatility over the years every time, but it gets done. So that's the case wherein 18,800 could be difficult over the next 10 session. But stock-specific trend still continues to be positive. Over the last few sessions, we've seen a lot of global parameters take a dip, whether it is a uptick in DXY, whether it is a downtick in US markets, whether it is a downtick in some of the European markets. But we've not seen a similar correction here. That indicates there is relative strength, but there is a waiting period which is left for some more clarity globally. And once that happens, we'll see a bigger move. What is interesting is the breadth is still good. The Nifty mid-cap 100 actually hit a new all-time high. So clearly the place to be right now is to look at stock specific rather to look at the index as much. Till the time we are above 18,000, 18,050, the trend is positive. Be positive on the index. Look out for buying on dips.
Buying on dip strategy is what Naresh is advocating. And as we step into the new series, Kunal, what's your outlook for the month of June? Do you also believe that as long as these debt ceiling negotiations continue, we're in for a bit of range-bound trade?
Yeah, I think we've already gone through that range bound for the last 10 days.
But
I
will
believe.
Continue.
No, my sense is that we should break out now this time around because, we've gone through a time-wise correction. We've gone through a patch of, churn of sectors where the move initially started off from high beta spaces. Now it's moving to the defensive. So that churn is also sort of, completed. That one first phase of a churn is completed. And I think now the market should be ready for a breakout. Now, the only concern, as I highlighted, start of the week, was that the dollar index rising up higher. That could probably act as a impediment to the current market rally or the pace of the current market rally. But I think the sooner we break past about the 18,400 mark, the quicker the momentum could probably get back into. Now the data in terms of the long rollovers was also very interesting for the indices. For the June series, there was a good amount of long rollovers seen for many of the individual large cap name stocks, and reduction of short rollovers for many of the beaten down sectors. So I think that also adds to the positivity for the markets overall. So would be expecting that pretty soon, hopefully by the start of the next week, we should be getting up for a breakout.
Okay, let's talk individual stocks as well then. Naresh, hi, morning. What's on your radar?
So sticking towards a pick of large cap and a mid cap. So first is a buy on HCL Tech. Technically, the stock is shaping up for a bigger cup and handle breakout if it can sustain about 1140, 1150. In the large sector, the stock has been showing a lot of relative strength, did not go back to September lows, which happened for larger names. So out here seems like this could be the leadership stock in the IT large cap sector. So out here expecting a breakout going forward, a stop loss at 1080 and a target price of 1250. Second is a buy on L&T Finance Holdings, which has given a 1.5 year breakout above that 98 to 100 mark. The stock has consolidated over those areas and slowly and steadily made a new 52-week high. Expecting a move towards 120-25 zones. That would be the price where it was pre-COVID. A stop loss to be kept at 98.
Right. Okay, and Kunal, let's have your stock ideas as well.
So I'm betting on large cap names. HDFC Bank is the first stock which I would suggest as a contra buy. The stock looks attractive for a target of 1660 at least over the near term. Indicators extremely oversold for HDFC Bank, so expecting a reasonable bounce from current levels. And stop loss for this trade could be kept at 1577. Reliance Industries is the other stock which I think yesterday formed a bullish hammer pattern on the daily charts. So looks attractive for a reversal for Reliance Industries. Targets of 2550, stop loss at 2410.
Okay, there you have it. There are your stock strategies this Friday morning. But let's shift gears then and find out what all the global commentary is centered around. And we've got Anisha here to sum it all up for us. Anisha?
Well, the global commentary continues to be centered around the US debt ceiling, which is impending on June 1st. The regulators are working hard to reach an agreement, but for another comment coming in from McCarthy that the agreement is not reached. They'll continue to work over the weekend and they're committed to finding a deal. But for now, no agreement as of yet. Reports are suggesting that both the parties are nearing a 2-year deal at this point of time. So we're tracking that very, very closely. In the meantime, we're getting commentary from Nuril Rubini as well on the US debt ceiling itself, saying that they may get to the last hour before there's an agreement, or it's possible they don't reach an agreement. If that happens, then the market is going to crash. So not ruling out the possibility of not reaching an agreement here. Meantime, commentary coming in from Fed members as well. For instance, Collins says that while inflation is still too high, there are signs of moderation, and that's the positive news. The cooling in price pressure means that we may be at or near the end of the hiking cycle. In fact, she says that it may be at or near the point where monetary policy can pause raising interest rates. So that's something to watch about. Separately, this artificial intelligence theme, we have been talking about how Nvidia stock was higher by 24% overnight, but there are contra views coming in as well. Remember, Cathie Wood's ARK had also sold out in Nvidia before this rally happened, and now we have David Rosenberg saying that investors piling into stocks with artificial intelligence exposure may pay a hefty price, and he believes that there's this over enthusiasm at this point of time, and that is distracting from the recessionary fear that the market is really facing and bracing itself with. So overall, a bit of mixed views coming in as far as artificial intelligence is concerned.
All right, thanks very much for giving us the global view. We'll slip into a very quick break. Be right back as we delve into all the stocks and news, as well as views on the charts and opinion from our fundamental guests.
Back with the market right here on ET Now. Let's just bring up what the SGX Nifty is indicating this morning, because it's indicating a mildly muted start, but who knows, maybe like yesterday, we actually managed to recover a good 100 odd points from the session lows after what looked like a very sideways session for the better part of trade. But let's talk stocks, and where is it we could see gains? Aster DM, that's confirmed that they are actually eyeing potential buyers, and their advisors are looking to sell stake in their GCC business. Remember, ET Now had reported this story back in September, in fact on September 20th, back in 2022. Sharad is here, my colleague who broke that story with all the details. Sharad?
Well, yes, an important development coming on the potential restructuring of Aster DM Healthcare's Gulf business. And on the notes on accounts on yesterday's quarterly results, they have mentioned that the investment bankers are working actively with the potential buyers and their advisors. Now, the shortlisted candidates are expecting a strong commitment to close the transaction soon, and the company has stated that the binding bids are likely to be received by the end of Q1 FY24. And of course, there would be a review coming in from the board for the proposal of GCC business. Now, on 20th September last year, ET Now had reported that the company may sell stake to strategic investors for its GCC business, and this Gulf business itself compromises almost 75% of the total revenue of the company. And looking at the valuations, of course, we look at the asset value for the Indian business that stands at roughly, you could say, on an EBITDA basis for FY24 coming in at almost 500 odd crore rupees, while the number is almost 3 times for the Gulf business. Now, looking at the enterprise value, that is northwards of more than 12,000 crore rupees for the India business, while for the GCC business it stands around 15,000 odd crore rupees. Now, we did check the EV EBITDA multiples as well for FY24. As per report by HSBC, the India peer average stands at almost 22 times, while the GCC average stands at almost 10 times. So it will be very interesting to know where the deal happens on the acquisitions, whether on the premium or the discount front.
All right, watch out for Aster DM in trade. Moving right on then, the FMCG index has been one of the top sectoral gainers on a year-to-date basis, outperforming the Nifty 50 index. We spoke about as well how Britannia and ITC have hit their 52-week highs. Let's find out what the trajectory is for the FMCG index, and we've got Vinny here who tracks that space closely, joining in with the details. Vinny?
Good morning, and obviously, you know, the FMCG pack has been those outperformers, outmovers coming in, and it's a defensive play coming in as well. So when you look at just the growth that is seen on the YTD basis, FMCG index has grown 12%, while the Nifty 50 has just grown 0.71%. So look at the gains that we're seeing coming in from the FMCG index as well. Varun Beverages are one of the likes names. ITC obviously has been those outperformers coming in over there as well. Now, obviously, this is the best start that we see for the FMCG index since 2017, and gaining for 5 consecutive months is what we have seen coming in for the FMCG index. Currently trading somewhere around the 38 times the 12 month of forward P as well. Obviously, we'll be keeping an eye out on that. But what are the triggers? What is actually happening in the FMCG space that you see actually leading to that growth? And obviously, when you look at it in terms of weightage, that has also increased in the FII portfolio for the FMCG index. So what are they liking in here? When you look at it, FMCG players have actually, you know, cut down their ad spends when you look at it, especially in Q4, and that has started improving the margins of the company. Raw material prices, let's not forget, that has also cooled off a lot for FMCG companies. Apart from a few raw material prices, other than that, we've seen a cool off coming in most of them, and that is supporting the margins of the company. So gross margins expansion we saw this quarter as well, and we could expect that going forward as well. Rural growth, which has been a bit subdued in the last 1 year, that has started seeing a recovery coming in as well, and especially the packaged food companies. So, you know, this time we've seen that outperformance coming in from Nestle, outperformance coming in from Britannia in terms of numbers, because packaged food started doing much better in terms of performance, because that was the trend going on this time around. Now, in terms of what are the levers going forward for the company, raw material prices coming down, increased focus on premiumization, that leads to better margins for the companies. Drivers for growth margins, EBITDA margins especially, is deflation, key raw material prices coming down. The value and volume growth. Price hikes were taken because of the inflation. Now that value volume growth has started coming down as well. The gap is reducing as well. So that could be a lever. Price cuts could be there. Grammage cuts could be coming in as well from the company. So that is a positive sign that we are keeping an eye out on as well. Distribution expansion, you know, Britannia has focused on that continuously as well. Nestle has spoken about capex plans, including more in rural areas, tier 2, tier 3 cities. Distribution, that is an important factor, as well as improving rural growth, are key triggers that could come out for the FMCG companies going forward. Now, what are the risks? Do you think this is overdone? That's a factor. Now, risk for the FMCG company would be if rural markets do not recover on time and if there's a slowdown in the rural markets. Other than that, when you look at it, monsoons. Obviously, today we have the IMDb coming out with their report on June, how are the monsoons look at, but erratic monsoons are a big concern that come in for the FMCG industry as well. And competitive intensity, that has been increasing as well. So do they need to spend more money in terms of ad spends? If they increase their ad spends more than expected, then margins could again see a bit of a decline. So how that pan out is a key risk that we should watch out for. And in terms of valuations, let's look at the valuations that are there. We've compared the 1 year forward PE valuation with historic valuations. When you look at it for Nestle, still below those historic valuations, HUL2 around those historic valuations level, and peak valuations still below those peak valuations as well. So yes, that's the value coming in as of now for FMCG companies, still below those peak valuations.
Okay, Vinny, we leave it at that. That's about Nifty FMCG, but auto major M&M is going to be declaring its numbers. And let's take it across to Srishti, find out what is it that we can expect.
So for M&M, we have seen that the product mix wasn't that great this time around because the tractor division saw a sequential decline of 15% in their overall volumes. While the auto volumes were supportive, they have seen growth on a sequential basis, and reflecting into the numbers, the revenue and the top line is expected to be flat at 2,108.99 crores is the expectation. EBITDA expected to be flat on a sequential basis, 2,815 crores is the expectation, and the margins too expected at 13%, but the profit is expected to see a decline of 20% on a sequential basis because the depreciation as well as the tax cost is expected to be higher, and we are expecting 1,647 crores in the bottom line. So all in all, the product mix wasn't that great, although the auto volumes as well as the margins are expected to be supportive. So that's the expectation from M&M. Let's see if there is any surprises on the margin front.
All right, thanks very much, Shrishti, for those details on M&M. Moving on, Sun Pharma all set to report its numbers, and this quarter will see the full impact of the halal import alert, while revenue and net profit is likely to edge up on year. Let's take it right back to Shrishti, who joins in with what the street is working with. Shrishti?
Talking about Sun Pharma, this time a weak set of numbers is expected because we are expecting a sequential decline in all the headline numbers for Sun Pharma, and that's on the back of a weak geography mix. Because if we look at the internals, then this Q4 is a seasonally weak quarter for their India business, but nevertheless the company is expected to outperform a bit of an expectation thereabout. 9 to 10% growth is what we are expecting in their India business, but the key is the US business. There what they are facing is that this particular quarter will have the full impact of their halal plant import alert, and this is the first quarter that will have the full impact of that, and that will actually offset the growth and the resilience the Sun Pharma is showing in their specialty division. Over there we are expecting a sequential decline on a quarter-on-quarter basis, and the analyst expectation is that US sales should be around $400 to $420 million. All of these factors are expected to report in their numbers, as well as we are expecting a inch up in their R&D expense to 6.4% this time around. But let's talk about numbers, and the revenue is expected to see a decline of 3% on a quarter-on-quarter basis. EBITDA expected at 2,585 crores, and even the margins are expected to see a cut from 27% near about to 23.8% this time around. And lastly, onto the profit figure, we are expecting a decline of 14.5% at 1,854 crores is the expectation. But the key to watch will be the management commentary, especially when it comes to the US pricing as well as the new product launches going ahead.
Okay, Srishti, we'll leave it at that. M&M on our radar as a lot of fun numbers we're going to be reacting and digesting. Let's take it across with the Group CEO at Kolte Patil Developers, Rahul Talele, joins in on the show right now. Rahul, hi, morning. Good to have you on the show. Rahul, after a record FY23, you're targeting to achieve 2,800 crore sales in FY24. You already have a run rate of 700 crore plus per quarter since the last 2 quarters. Do you think this guidance is conservative then? And how's the traction on ground currently?
So, I mean, in last 2 years, if you see the numbers 2 years back were 1,200 crores. So it is an orbital shift for the company. So from 1,200 crores to we have reached almost double the number in 2 years of 22, 32 crores. And going forward, we are confident of achieving a 2,800 crores pre-sales target. To answer your question, we are confident about multiple launches in Pune. Even the launch pipeline is pretty stronger. But we are simultaneously concentrating on a betterment of price realization also. At the same time, we want to achieve a good set of volumes also for the company. So this year is going to be a better price realization. On top of that, good aggressive numbers in terms of the pre-sales number as well. So 2,800 crores is the number what we are targeting for. And on top of that, what we have observed in last 1 year, there were little deviations in our projected launches. Hence, we don't want to face similar challenge, and hence we are at this moment we are confident of achieving 2,800 crores of number with the set of launch pipeline, and we are communicating that as a guidance.
All right. Wanted to understand the outlook on your sales, because over 60% of that in Q4 was on account of the Life Republic Township. What is the outlook in terms of the inventory that's still on hand from this project, and what other projects will contribute to your 2,800 crore rupee sales target?
So Life Republic is a flagship township project for us. So over there, around 14 to 15 million square feet of balance inventory is there. So currently RERA launch inventory is close to 1,000 crores in the township, and in the ongoing financial year, we are planning to launch multiple phases, multiple new sectors in this township as well. So in last 2 quarters, we have consecutively crossed 400 crores of pre-sales number in this township. And so one important thing from a township perspective is there is a good amount of price realization betterment in last 1 year. So we used to sell an inventory at around 5,200. Now we are selling an inventory in the range of 5,700, 800. So that is a very positive move, considering the fact that we are sitting with a huge pile of future inventory in this township. So it is a positive sign. To answer your second part of the question, so this 2,800 crores, out of that 75% will come from a Pune projects, and 25% will come from a Mumbai and Bangalore projects. And even in Pune, so in fact, township, more than township, we are planning to get the numbers from a non-township projects in Pune, considering the fact that we are strong with our launch pipeline.
Right. On average, Rahul, property prices have risen by about 9 to 10% in the top cities. But there is a marked improvement in your realizations, about 14% as I understand sequentially. What's causing this? A better sales mix? And how is pricing expected to pan out in FY24?
I mean, to answer this question, if you see the last year, average realization was close to 6,400, 500, and this year it is close to 6,800 per square feet. Considering the fact that our Mumbai percentage is going down from 30% to 20%, but still we are bettering in our per square feet price realization on the fact that on the basis of it is a better realization across projects in Pune or non-Mumbai projects. So we have improved our prices in the range of 5% to 10% across our projects in Pune and even in Mumbai. So it is largely because of that. But yes, to some extent, it also depends on which project is contributing how much and what is the the price tag of that specific project.
And apart from the healthy growth in revenue, we have seen a significant jump in delivery at about 3.3 million square feet for FY23. Can this become a benchmark now for you?
See, delivery is a function of what is the height of building and when you have sold the maximum your inventory. So, I mean, there can be a spikes in terms of the delivery, but yes, even in the FY24, our delivery numbers will be at least 3 million square feet. And going forward, since our pre-sales base is going up significantly, and if you consider the average project tenure of 3 years, going forward also we are focusing on the better and better delivery numbers year on year.
Right. You're also planning to acquire projects with a top line potential of 8,000 crores, right? Just wanted a sense as to how is it that your debt levels would move? How do you plan to fund this project pipeline?
So currently we are with a net debt to equity of 0.1. So our net debt is hardly 110 crores. And for this new BD acquisition, which is already in a very advanced stages of discussion, for us, the need is in the range of 500 to 550 crores. So our priority is to fund this through internal accruals. And the second priority can be leveraging further. So for that, we have taken a, I mean, there is a good amount of room to go further in our debt to equity ratio.
And several competitors as well have been capitalizing on the redevelopment opportunity in Mumbai. You recently signed as well a redevelopment project. What is the opportunity that you see here?
So in regards to these two projects that we have acquired very recently, we are aiming to achieve a launch for one project, which is at Vashi in next 6 months. And for the other project, which is at Mulund, we are aiming for either in Q4 or Q1 of next financial year. So we are already started working on the approvals of both projects. And yes, we have, delivered 2 projects in Mumbai in redevelopment space. There are 5 ongoing projects for us in redevelopment space in Mumbai. We have got a good traction across 5 projects. So there is a good amount of price realization improvement, and there is a good amount of velocity also for us in Mumbai. And considering this trend and feedback received from the redevelopment vertical, we are focusing over there to acquire more and more projects. Having said that, we are also working for a non-redevelopment acquisition in Mumbai.
Right. So far, Rahul, we've only spoken about Mumbai and Pune, but what about Bangalore? Rental yields have risen significantly over there. Available inventory is also low. Would you be looking at doubling down your efforts in this attractive market?
So, we have a presence in these 3 geographies. Our focus is to enhance, strengthen our presence in Pune. Likewise, to take the opportunity of our experience in Mumbai. And likewise, we want to have a niche project in Bangalore in the form of JD and JV. And we are evaluating a couple of opportunities over there. But to answer your question, there is a good amount of rent improvement in Pune as well. So wherever the IT presence is there, there is a good amount of jump in rental yield in specific assets. So we are focusing on Bangalore, but this year is going to be a focus on Pune and Mumbai, and partially on a Bangalore in terms of the BD opportunities.
Sure. Rahul, consumption trends across India indicate a K-shaped recovery for realty. Is that something that is impacting your project mix decisions? Will you be looking to launch more high-ticket projects in the future?
Now, if you see our priority launch pipeline, it is a blend of all sets of projects. But in the recent launches, our experience is very good in terms of the high ticket size spacious units. So MIG and HIG are contributing more as compared to affordable or smart projects. But at the same time, we are offering across verticals and across price band, particularly in Pune. So right from, we have a product right from 5,000 to 12,000 rupees square feet in Pune. And we are confident of achieving a good velocity across projects. So most importantly, post-COVID, the customer requirements have changed. So if you are addressing the needs of customer, then you will get a better velocity in all sets of projects. And that is what we are aiming for.
Much then for taking time out and joining in with a take on how business is shaping up. Let's move on then. Stocks on the editor's radar. Find out what they are today. Interesting names that we're taking up. Let's begin then with Page Industries. Now, came out with their quarterly performance, and it has been a big earnings miss this time around. Since the biggest miss that we've seen since Q1 of FY21. And with the subdued demand conditions like this, Nikunj, what does this spell for Page?
Yeah, the noise I think would be heard for Page today. The numbers have disappointed. And it amazes me that how the category which is like this category which is based on the fact that premiumization will increase, things will move up in terms of more unorganized market moving to organized market, Page numbers have not been great. Not that commodity pressures are extremely high. I think demand is a clear concern. Are they losing market share? Or this is largely because the market per se, especially the leisure wear market they are in, is that market contracting. Bottom line here is Page numbers have disappointed. It's an expensive stock, trading at a P multiple of 55, 60 times depending on the estimate, 1.5 year forward. When a stock which is expensive stock, when a stock where markets have taken growth for granted, it's like HDFC Bank, markets have taken growth for granted. The minute they falter here and there, and the minute markets feel that there is a bit of a challenge in terms of growth, an expensive stock will come down. Yeah. So I think Page has got downgrades. It will underperform. And what a crazy P, man. I mean, where is the P? Hello. Yeah, 55, 60 times, 1 year forward, what will happen? It will fall.
Yeah. Okay, so a lot of factors put together, the high P multiples, etc., all is not going to augur well for Page Industries. Moving on then, let's discuss Hero Moto, and I'm sure a lot of bike enthusiasts will be pretty excited because this is a joint effort with Harley and Hero to showcase the X44 premium cruiser motorcycle. What does this mean for some of the other players for Hero Moto as well?
X440. Now, I like the name because it actually represents an engine which will have a CC capacity of 440.
Okay.
Now, Eicher, in a sense, boys and toys. So, Eicher's RE, which is the most promising premium wear bike, has a engine capacity or CC capacity of 350. So, Hero MotoCorp is confident that Indian roads can handle 440 CC. But what is interesting here is that if you frankly ask me, Hero MotoCorp has not really lived up to the brand potential they had after the split with Honda. The export market has not picked up. They've not really innovated themselves. If they're able to get X440 right, which is a collaboration with Harley, I don't see technology and adaptation would be a challenge there. But if they're able to occupy that space in the premium bike market, which right now is dominated by Eicher by almost 75-80%, Bajaj has tried, TVS has tried, nobody's been able to dent it. If Hero is able to take a big piece out of that pie, it will certainly give them a perception change that, okay, Hero's coming back and technology and new technology innovation they can handle. Look, Avan, they lost on exports and they've lost on EV. You better get the premium biking right. So they have to come back and do something which just endorses the fact that this is the Hero which was known for innovation and, efficiency. It could add, according to Morgan Stanley, 2 to 3% to the top line. So this, in a sense, could be not a game changer, but something which would excite the market that good old Hero is getting its mojo back.
Yeah, catalyst in the premium bike segment could be fairly critical for Hero Moto. That, Aisha, is the stocks on the editor's radar.
Oh yeah, that they are. In fact, let me take that discussion forward. Welcome on board Dipan Mehta as well. Dipan, hi, good morning. Great to have you on the show. Dipan, what went wrong with Page? And should you be buying the decline, which I'm sure is going to happen on the stock today?
Good morning and thank you for having me on your show. Yeah, really, I think Page has kind of bowled us all over and one needs to dig a bit deeper as to what exactly has gone wrong. But I suspect that what we saw with a lot of other retail players, especially those which are growing faster in the rural areas, there has been a bit of a demand slump because of higher inflation and uncertainty around weather patterns. And that may have impacted Page Industries, but we need to go a bit deeper and see whether this is transient or there are some structural changes taking place. So many questions for the management to answer. Let's just have a better view on it once we are more informed.
All right, Hero MotoCorp. I'm asking a marathoner to talk about bikes. I love bikes, but yeah, let's talk about it. Boys and toys, let's have a conversation. 350 cc, 350 is the engine capacity of RE. Hero MotoCorp is saying that I'm going to add 90 more and make it 440. What do you think it means for the stock?
See, I think that there have been many challenges for Eicher Motors. Not now, I think last 3 to 5 years since we have seen the success of Royal Enfield. Many competitors have come, but they have not been able to make a significant dent. I think iShares is miles ahead when it comes to competition in terms of launching new products. And what they are selling is a complete lifestyle, and they appeal to a certain class of consumers who are adventurous in nature. And that kind of a brand and that kind of aspiration can never be done by Hero MotoCorp or Bajaj. It's like any tier two, tier three OEM trying to sell a luxury car that just doesn't work. So I'm not that perturbed about any challenge coming from Hero MotoCorp or even Bajaj Triumph tie-up. The real threat from for Aisha is going to be from the electric vehicles, because their main crowd also, the main consumers also are quite eco-friendly, and they care about the environment. So unless Aisha has a significant offering in the electric vehicle side, maybe 2 3 years down the line, that's when they'll start to face all the problems. But for the time being, I'm not too perturbed. I think that with the way they have expanded the distribution and the export opportunity available for Aisha, they should be able to sustain mid-teens type of growth for at least 3 to 5 years or so.
Okay, that's the take coming in on Eicher Motors, on Hero MotoCorp and Page Industries as well. And Kunal, first on our radar this morning are going to be these two stocks, right? Hero MotoCorp as well as Page. Tell me what the charts are reading. I mean, how bad could it get for Page today?
Well, I think the stock was actually struggling. In fact, I was looking at the change of open interest data for many of the large cap FNO stocks, and Page Industries has seen a very sharp reduction. I think the net reduction in terms of open interest is almost 38 lakhs to 40 lakhs contracts, 40 lakh in terms of open interest for Page Industries. So that itself tells you the way in which the markets have entered into the results for Page Industries. It was not in an exuberant mode for the stock where you've seen a sharp reduction in terms of the open interest, and that would probably play a lot more of an overhang. So we'll have to wait out for a pattern where the OI gradually increases. So assuming if the stock corrects by say 5%, 10%, we'll need to see that at what point of time in terms of the price correction will the OI start to add up for Page Industries. That could be a point where we may expect a bottom, but at least it looks like that the stock should correct and get back below that 40,000 mark at least over the very near term. For Hero MotoCorp, it could be a different ballgame altogether because the stock actually performed exceptionally well in the last 1 or 2 months. In fact, if you look at the price comparison between Eicher Motors, Hero MotoCorp, and if I could probably add even the four-wheeler names in the last 1.5 odd month, Hero MotoCorp has shown a very good recovery. I think from 2,250 levels, the stock is almost at 2750 mark, which means a sharp recovery of more than 20% for Hero MotoCorp. So it went into the numbers with a lot more positive expectation, and that's why I believe that the stock can stand to outperform.
Looking at the list of stocks which are at a 52 week, and despite the fact that consumer stocks are expensive, consumer staples are expensive, the new high on the Nifty are 3 names: Bajaj Auto Company, ITC, which is FMCG stroke staples, and Britannia, which is FMCG stroke staples. So irrespective of what we may think and believe, markets are telling us a different story.
Yeah, Nikunj, you're right. I think, see, the index is a composition of 50 stocks, and sometimes the laggards also will, have their day in the sun and they will take the index higher. But that doesn't mean that, those are the best stocks to buy. The likes of ITC, they have been huge underperformers for many, many years, and now they are, kind of play catch up over there. Same is true for Bajaj Auto as well and Britannia as well. But the bulk of the, say, last 2,000 point gain in the Nifty has come from the banks. It has come maybe from technology as well. It's come from Reliance as well. So just because the new highs the recent change in the Nifty on the positive side is driven by these 3 companies doesn't necessarily make them the best buys at this point of time. All of these 3 companies have got, I would say, issues in terms of growth rates going forward. ITC remains a tobacco company where growth rates will be in low single digit. Bajaj Auto, it's facing a tremendous threat from the EVs. I think we saw today in your own pink paper the news about Ola Electric planning $1 billion type of IPO to kind of drive the two-wheeler sales, electric two-wheeler sales, and that's going to be a huge challenger for Bajaj. And Britannia, I think, had 2-3 soft quarters, but last December quarter numbers were exceptionally good, and that's certainly one stock that one should look out for. It seems to be amongst the best play in the FMCG pack. So just because stocks have reached new high doesn't necessarily make them that they're going to be the growth drivers or the index drivers going forward. I think we need to have a more balanced approach.
Okay, let's talk about one stock, and that's Zomato. Let's just bring up the stock price for you, and maybe if we can just bring up, the last 1 year chart, that will give you a better sense of how the recovery in Zomato has been from near about those 40 rupee per share levels all the way now, closing in on 70, or at least that's inside. Well, there's clearly a new bull in town, or actually he's going to be in town over the weekend, Chris Wood. He's actually become bullish in Zomato. In his latest Greed and Fear note, he's talking about India long-only portfolio investment in Zomato, he says, which is going to be introduced with a 4% weighting, while investment in HDFC Life will be removed. He says in the global long-only equity portfolio, investment in Zomato is going to be added, and that's going to be replaced by shaving off investments in JD.com as well as Alibaba. So that's a big nod of appreciation, or stamp of approval rather, coming in from Chris Wood as well now talking about Zomato. Dipan, of course, those all-time lows in Zomato are a miss, but now that you have more confidence in what the company intends to do, the deliverable capacity and capability, would you be a buyer here?
See, first a disclosure that we are already invested in Zomato. It's not that we are sitting on huge profits. And more and more, I'm seeing the way these new age platform companies are shaping up. Certainly, there is no disappointment on the growth front. I mean, they are following through a plan. Their growth rates have been good across the board. They are making very strong efforts to get into EBITDA positive and then start to declare very high cash profits as well. But I think that still seems to be a few quarters away. We are approaching these companies just as you buy options, and with a very longer term view, like 5-10 years or so. The likes of Zomato, Policy Bazaar, Nykaa, Paytm, these are stocks of the decade of 2030s, and they could be huge multi-baggers over the next 7-8 years or so. But they have this investment phase which they are in, which is reflected in their P&L. So I think you will have trading rallies in them from time to time as there is positive news flow. But for them to deliver sustained, returns, significant outperformance over their peer group or other mid-cap stocks, that may take a while. But on the whole, I think the performance and the environment and the overall, build up of the stock, especially Zomato, looks quite good. And it's a duopoly, and certainly I think at some point in time they'll have the benefit of that.
Okay, stay on with us, Dipan. Let's also get in more fundamental stock ideas and hear it out from Sanjeev Bhasin of IIFL Securities. What are some of his top bets? Listen in.
On auto, I am very bullish on Maruti, and I'm extremely positive on some of the OEMs like Bosch, which has been a big outperformer. But Maruti, Hero Moto is my dark horse. You know what Tata Motor has done in the last 6 months, I think then this year will belong to Hero Moto, given that rural incomes and two-wheelers are seeing a lot of traction. Out of every 4 motorcycles charged on EVs, 3 are Hero Moto, and it's not a very well-known fact. So they are gaining market share in EV, which is a small segment in the two-wheeler, but this stock can be a dark horse along with Maruti.
Lot of breakout stocks, and one big breakout stock yesterday was Tata Elxsi, something which you tracked with Nuresh with a magnifying glass. Nuresh, Tata Elxsi.
So this is a tough one in terms of the recovery it has made, but overall longer term trend has been damaged. So the stock corrected from 10,500 all the way down to 6,000. Now it has started making a recovery. Out here, I would expect if this continues, the target price would be 8,000. 8,000 is where we saw the last big gap down in October. So in the near term, the last 4 months, it has made double bottoms around that 6,000 mark. So out here, it's a trade with a very strict stop loss at 7,000, 7,050 and a target of 8,000, 8,400 at max. So for now, we are seeing a good recovery across the mid-cap IT names. And say we've seen something like a KPIT Tech hit new 52-week highs, new all-time highs. Tata Elxsi, whether it can go to those levels looks difficult, but for now, move towards 8,000, 8,400 is possible. But one should keep a strict stop loss here.
Dipan, we've had a good comeback in the market. No one should complain. I mean, we are not at bombed out levels. If you remain fully invested through the course of last 2.5, 3 years, there are some stocks in everyone's portfolio which are at an all-time high or nearing an all-time high. But given that we've had a 7-8% rally on the Nifty, about 10% rally on the bank Nifty from the recent low, is it prudent now to take 10-15% profits off the table?
No, Nikunj. This is just, if you ask me, this is just the beginning. And I think after all this inflation, interest rate damage which has done to the equity markets globally, and I think the last sort of mini crisis is this debt ceiling in US. Once we're over and done with, I think we see very good times for Indian equities. The most heartening factor is FII flows turning positive. The earnings season has been pretty decent, and there's nothing in the earnings season to suggest that fundamentals have been shaken or that growth rates have been impacted. We saw today's GDP print also, that was also quite decent, slightly higher than what economists were expecting. The fly in the ointment, of course, could be in the monsoons, but considering that we have had 4 or 5 good monsoons, it may not have such a negative impact on our economy. But on the whole, I think we are revving up for good times in the next few months or so. And of course, I could be wrong over here, but I don't think this is the time to book profits. In fact, this is the time to look at increasing exposure to equity at every correction or even around these levels also.
Let's set the tone for our viewers here. And in case you've just joined in, hello, good morning. It's time to say hello to the June series. Friday, we're starting a brand new series. What drives the market? Triggers, events, flows, and sentiment. The sentiment surely is positive, but I don't think market has reached what could be called as a Humpty Dumpty level. In last 12, 13 weeks, if anything we've actually added muscle. That's largely because of earnings. So the markets have added muscle, they've not added fat. So the markets are looking healthy in terms of the valuation. Then you got triggers. You don't have any large triggers per se. US debt ceiling, what Dipan Mehta just referred to, that is problem for US, not for us, so much so. Third is liquidity. And on liquidity front, FIs are back, welcome back. But more importantly, domestic institutional investors are sitting on cash, and those cash levels are at a record high. On an average, as per the last reported data, what we have, the domestic institutional investors' cash level is at about 5% plus. If the cash level is at 5% plus, and when markets are going high, domestic institutional investors will be forced to buy more to catch up and cover up their underperformance and NAV, because they've underperformed the Nifty. Because you're sitting on cash and the markets are going higher, obviously you're underperforming. So Dipan Mehta, that's my limited point. That while we are talking about FIs are back and we're saying welcome back, Der Aaye Durust Aaye, welcome back to India. But domestic institutional investors also have shied away. They are sitting on a lot of cash. What if they start reducing their cash levels?
Yeah, that's right. I think domestic institutions is never an issue because they are really the smart investors. And whenever there is a panic in the market, they are there the first to support the market and take advantage of it. So they are a good counterbalance to FII flows. FII flows are dependent on many complex factors. A lot of it is coming through ETFs as well, which buy and sell stock irrespective of the underlying fundamentals. So I think it's a good fact that a lot of the domestic institutions are sitting on cash. The SIP flows continue to remain very strong. And I do sense that there's a growing appetite for equity amongst the HNIs and family offices as well. And that trend is going to continue. And this entire pace of financialization of savings is certainly very beneficial for Indian equities. So as such, we have been in a decent bull market right from the lows of the pandemic. But the aberration was the spike in commodity prices, the war in Ukraine, the global kind of macro headwinds. When we have kind of swum through all of that, we have sailed through all of those crises, and now we are in kind of calmer seas at this point of time. And that's the reason of why I'm very optimistic on the market over the next few months or so. And I have told your channel before, I think you all remember that monsoons are the best time for Indian equities. Intuitively, I can say I don't have any statistical evidence to back it. But it's just that I'm looking forward to this monsoon, especially on the equity side. We could have a very good bull rally during that period.
Market तो ठीक है ऊपर चला जाएगा. Who's winning the IPL?
IPL.
Yeah, that's important, guys. Sunday.
Actually, Nikunj, I'm not really tracking the IPL. Sorry to say, I'm more of a India team fan, so I'm looking forward to the Test match World Cup, and of course, all hopes and prayers are on India winning the World Cup championship for Test matches.
IPL franchise, all right, Dipin, it's all right. I mean, that's the bigger trigger. I mean, the Indianness is important. But in terms of an IPL franchise value, we'll put some data out in the middle of the day. We're just working on that data, that what a franchise value it has got created. When IPL started, it had a value of less than $1 billion. And today the franchise value is about $15 billion. So IPL franchise per se, I guess, has been the biggest multi-bagger, if you frankly ask me, in terms of creating a lot of wealth.
And tonight, Nikunj, Gujarat Titans versus Mumbai Indians. What's your game plan? Are you going to be sitting down in front of the telly? Have you
Traveling, family function, traveling for that.
Oh, so you'll be missing. What about you, Kunal? Have you got any plans set, or you're not watching IPL?
I'm exactly traveling to Ahmedabad today.
Oh wow, we've asked 3 men on this show and none of them are watching IPL, but that really doesn't take away from the solid audience, of course, that will be glued in come tonight. So that aside, I won't talk about cricket, but maybe, Dipan, get in your views on travel, because I know that all the long weekends are booked out. We are clearly spending a lot more on airfare or anything when it comes to hotel bookings, with the summer holidays as well around the corner or having already started. What's your outlook on listed players within this space?
No, we are very positive. I think one of the biggest winners of this earnings season has been this travel tourism. And notwithstanding the issues at Go Airways, I think Indigo's numbers were exceptionally good, and the entire prospects and the entire environment for Indigo, that is Interglobe Aviation, looks very interesting. Indian hotels also certainly should be on the shopping list of many investors, as Disclosure we and our clients are invested in it. And I think that these are great times for travel tourism companies. Another company which comes to mind is Mahindra Holidays. You can check out their numbers as well. They were quite impressive. Again, a disclosure over here. So I think next 2-3 years, because of maybe demand-supply mismatch, because of resurgence of travel, and it's not just revenge travel. I think more and more is becoming like a way of life for the millennials and for the Generation Z. So I think that that's one sector that we should be overweight on. Valuations are on the higher side, but then you're looking at historical earnings and comparing. I think next few quarters, you will consistently see companies engage in the travel and tourism business beat the analyst expectations and surprise us on the earnings front quarter after quarter.
I'm just looking at some numbers here. The Indian Hotel, by the way, I have great regard for Puneet Chhatwal and what he's done in terms of turning it around in a difficult time. But it's got a market cap of about 50,000 crore. Profits 1,000 crore this year. Let's assume a 25-30% growth for FY24, which still means that FY24 and FY25, the stock actually is trading at P multiples which are north of 40. What is the right value to look at a stock like Indian Hotel? The fact that hotels are booked, the fact that tourism is going the right way, isn't that already baked in at a market cap of 50,000 crore for Indian hotels?
Yeah, I mean, that's one way of looking at it, but I'm not sure it'll just be 15-20% type of growth rates. It could be much higher. And all the time they are consistently increasing their capacity as well. They're trying to lighten the balance sheet. And also, Nikunj, there's the fact that when you want to buy a hotel company, what is your choice, So typically, Indian Hotels has been an expensive play in the past. And I think that when the overall industry is doing as well as it is doing just now, you will see that a lot of the investor crowd moving to that particular counter, and some amount of PE expansion is to be expected. But if this PE is sustained at these levels for even 3 to 4 years or so, even then, I think just based on the EPS growth, which could be anywhere north of 20%, you could still expect that 15-20% type of a return on the stock price, assuming the PE remains constant, but the EPS will take the stock price up. So that's our assessment. And, there could be quarters where the performance is slightly soft. But remember that they are expanding capacity also very aggressively. And the threat from Airbnb and some of these other players, that is much reduced at this point of time. We haven't even seen the beginning of business travel pick up the way it has right now. It is just the holiday travel which is driving revenues at the Indian hotels. But that also is a big factor to consider.
All right. Thanks so much, Dipan, for joining in and sharing with us your outlook. Let's hope you have some stellar travel plans as well lined up and have a good weekend. But let's move on and get in those mid-cap trading strategies. What is it that our chartists are picking out for the day, Naresh?
So that would be a buy on RBL Bank. Now, if you look at the stock price has seen a decent enough correction from 180.85 back in January. The stock corrected all the way down to 135. The recent bottom is around 140. We are seeing a bit of a higher bottom here. Short-term breakout would be about 150, 154 levels. So it's a risk-reward trade here. We've seen the rest of the banking space do well, the small-cap banking space do well. So out here expecting this to go towards a move back to 175 to 185 levels. Stop loss to be kept at 140.
Okay, Kunal, let's find out your top trades.
That'll be a buy on Jubilant Food. The stock is at a 4-month high for itself, trading at a swing breakout point, confirming strong rollovers in terms of the open interest change for the June series. All of that should augur very well for Jubilant Food over the near term. Targets of 520, stop loss at 475.
Okay, thanks very much for those top mid-cap strategies. Let's move on and take a look at the greed and fear sentiments in the market right now. We've got Anisha here to tell us a little bit more about the changes in the portfolio. Anisha?
Well, it's a very interesting note that Chris Wood has penned down this time around ahead of his visit to India, and it's a detailed note talking about a whole host of issues, right from the takeaways from Karnataka election to the impending local election. He talks about the impact of demonetization, or the mini demonetization as he calls it. So very, very riveting read. But for the interest of the market, these are the key highlights for me from the report. First up, they maintain their 1 lakh target on the Sensex, expecting to reach there within the medium term itself. Secondly, he's added Zomato to the portfolio as well. It's come in at a weightage of around 4%. So that's the big, change in the portfolio as well. Thirdly, overall at the India level itself, he's added the weightage for India, reduced it for the likes of China, etc. So there's a definite shift happening away from China into India as well. In terms of the other changes which have been made, he's quite positive about the property stocks. He says that he's already added the exposure there, but going forward, he'll look for more opportunities in that vertical. He already has interest in Godrej Property, DLF, as well as Lodha Group. So he's looking to increase the exposure there as well. Where he's cut down the exposure is HDFC Life. Instead of that, he's added SBI Life to the kitty. And then also he's added REC, and he's increased the exposure there by 2 percentage points and reduced the ONGC exposure. So quite a few changes coming in as far as the India portfolio is concerned. Overall, for the market setup, he says that there are a couple of risks that one needs to take care of. That's the impending local general election next year and the fatigue that we are seeing in the retail activity in the Indian markets. But overall, earnings have caught up with the valuations, and now valuations look very, very reasonable as compared to the 10-year average. That's the word coming from him. And he also points out the trend of FII flows shifting, something that we have been alluding to right here on ET Now as well. So quite a bit of positive note coming in on India, and he remains quite structurally optimistic on India.
For toxin-free products for her baby, couldn't find it, decided to start a brand with her husband. It boomed. They're looking at IPO plans. I'm talking about the dynamic duo behind Mama Earth. That's Ghazal Alag as well as Varun Alag. There was the IPO that had been planned, $200 to $300 million, and then there were reports indicating that you were looking at a $3 billion valuation. So just clear the air for us now.
So I think we're still in the first phase of the process where we are waiting our approval on the prospectus.
What are the growth plans, financials? Because you guys did manage to post a profit in FY22.
Mama Earth continues to grow year on year. We see that brand to become like a large consumer brand.
All right, watch out for that interview at 9:45 a.m. But in the meantime, let's discuss the stocks on the editor's radar, Page Industries and Hero MotoCorp. Listen into Nikunj's take.
The numbers have disappointed. It amazes me that how the category which is like this category which is based on the fact that premiumization will increase, things will move up in terms of more unorganized market moving to organized market, Page numbers have not been great. Not that commodity pressures were extremely high. I think demand is a clear concern. Are they losing market share? Or this is largely because the market per se, especially the leisure wear market they are in, is that market contracting. Bottom line here is page numbers have disappointed. It's an expensive stock, trading at a P multiple of 55, 60 times depending on the estimate, 1.5 year forward. When a stock which is expensive stock, when a stock where markets have taken growth for granted, it's like HDFC Bank, markets have taken growth for granted. The minute they falter here and there, and the minute markets feel that there is a bit of a challenge in terms of growth, an expensive stock will come down. So I think Page has got downgrades. It will underperform. And what a crazy P, man. I mean, where is the P? Hello. Yeah, 55, 60 times, 1 year forward. All happen, it'll fall.
Yeah. Okay, so a lot of factors put together, the high P multiples, etc., all is not going to augur well for Page Industries. Moving on then, let's discuss Hero Moto, and I'm sure a lot of bike enthusiasts will be pretty excited because this is a joint effort with Harley and Hero to showcase the X44 premium cruiser motorcycle. What does this mean for some of the other players for Hero Moto as well?
X440. Now, I like the name because it actually represents an engine which will have a CC capacity of 440.
Okay.
Now, Eicher, in a sense, yeah, I mean,
yeah,
boys and toys. So, Eicher's RE, which is the most promising premium wear bike, has a engine capacity or CC capacity of 350. So, Hero MotoCorp is confident that Indian roads can handle 440 cc. But what is interesting here is that if you frankly ask me, Hero MotoCorp has not really lived up to the brand potential they had after the split with Honda. The export market has not picked up. They've not really innovated themselves. If they're able to get X440 right, which is a collaboration with Harley, I don't see technology and adaptation would be a challenge there. But if they're able to occupy that space in the premium bike market, which right now is dominated by Eicher by almost 75-80%, Bajaj has tried, TVS has tried, nobody's been able to dent it. If Hero is able to take a big piece out of that pie, it will certainly give them a perception change that, okay, Hero is coming back and technology and new technology innovation they can handle. Look, Avan, they lost on exports and they've lost on EV. You better get the premium biking right. So they have to come back and do something which just endorses the fact that this is the Hero which was known for innovation and, efficiency. It could add, according to Morgan Stanley, 2 to 3% to the top line. So this, in a sense, could be not a game changer, but something which would excite the market that good old Hero is getting its mojo back.
Okay, those are some stocks on our radar this morning. That's Page Industries as well as Hero MotoCorp and a whole host of other names as well. But let's tell you what the consensus call, or whether or not it is a consensus call to begin with, from our chartists when it comes to the Nifty. So Kunal is saying hold on to the Nifty, or actually he's saying buy. Naresh is, putting a hold recommendation there. And Santosh Meena as well has given a hold for the Nifty. So it's pretty much a consensus tilting towards the hold side. Kunal calling it a buy. Nifty Bank as well, Kunal recommends buying into it. Naresh recommends holding, and Santosh as well is calling it a hold. So the odds are in favor of hold for the Nifty Bank this morning. The pre-open rates marginally in the green, 18,368 is where they're currently at for the index.
Let's go back to the Nifty call once again. Kunal, when does a hold become a buy for the Nifty?
It's actually a buy from my side.
Convincing buy.
So convincing buy would be at 18,400, 450 levels. We've discussed this level time and again, at least
about 100 points.
About 100 points, but my anticipation is that I think start of the fresh series, we should break out of that range.
And do you see that happening in next 2-3 days?
Yeah. Okay. Hopefully in the next couple of trading sessions.
Suresh, would you preempt a buy and buy, let's say, out of the money Nifty calls?
So not really looking at Nifty, because somehow if we look at the Nifty chart, looks interesting, but none of the heavyweights look similarly placed. So we are not seeing, there are 3 names which I can say there is no clear trend, and that's like almost 15%, 17% is HDFC Twins, not in a trend. You have another 10% Reliance, not in a trend. You have Kotak Mahindra Bank, not in a trend. A lot of IT space. So what happens is the breakout may continue. It would be a slow and steady move. So taking call options requires a quick move. I don't expect a quick move. So even after a breakout over 18,400, 450, I do not expect 18,800 in the jiffy, say in a few sessions itself. So it's a slow and steady move. And in that case, you don't want to be buying call options. If you have the view, you would prefer writing some put spreads or looking at a strangle writing, etc. But overall, the better way now is to look at stock specific ideas, because that is where there are more clearer charts.
Frankly, the Nifty level resistance point of 18,400. It is almost there. One good day, one day of good work, and then boom, you will go across that important roof, so to speak. It's a new series, and compulsions of rollover, they are behind us. Nifty is not at a wild premium, and the interest is high, but the interest is not obese. The word obese is what you need to look at. You want interest to be high, because if interest is not high, momentum will not be there. First rates on your screen. It's a brand new week, and it's a brand new series, I beg your pardon. 36 points higher for the Nifty, 4 points higher for Bharti Airtel, Adani Ports looking strong, Kotak looking strong, Mahindra looking strong, Reliance has to catch up. Will HDFC Bank and HDFC, they both make a comeback? Well, we had two stocks on the editor radar today. One is Page Industries, where I think the problem is there. There you go. I mean, expensive stock does not grow, whoop, comes down 10%. That's why Page Industries. The other one is Hero MotoCorp, more like a Morgan Stanley upgrade, which could have an impact in the near term, not the short term. But yeah, they get the bike right. Hero will get its mojo back. That finally they are crawling back into what is the right strategy for a great company like Hero MotoCorp. But Page is where the real carnage, if I may use the word, is evident, down 10%.
Right. A lot of other numbers as well, not just Page. But since we are highlighting the weak links, let's also pull up SAIL, for instance. The Q4 numbers are below estimates. So I think there should be a downtick there, about 1.5% lower for SAIL. There's Z also. It's really a howler performance, much like Page. The EBITDA, the margins are all below estimates. There's a net loss of 196 crores. Although Z has started off flat, I guess much of the damage is already done on the stock. Look at Radico Khaitan as well. The volumes have actually come in okay, but yeah, the operational performance is weaker than what the street anticipated, 2.5% lower, and especially the margins have taken a bit of a hit. Emami as well, weak numbers there, and net profit has come in lower by 59.5%. 0.6% gone for Emami as we speak. Dredging Corp as well, weak numbers there. Gokuldas as well, weak numbers there. Shilpa Medicare, the EBITDA has slipped 48.25%. So yes, these are all a set of weak numbers. Surprisingly, good numbers then from Vodafone Idea. The debt has actually declined now to 2.9 lakh crore rupees. Losses also have contracted on a sequential basis, 2.25% higher for Vodafone Idea. We were telling you about Aster DM as to how we reported this story back in September itself. The numbers are out. The EBITDA is up 9.5%, and there are binding bids for the Gulf business, which are likely by the first quarter, though Aster DM starts off down 2.5%. GMM Pfaudler, now this is very high HNI interest stock. That is should be seeing some gains. The numbers are impressive. The EBITDA margin is coming at 11.1% versus 10.3% on a year-on-year basis. 4.25% higher for GMM as we speak right now. There's eClerx, MedPlus Health, Triveni Engineering, Mrs. Vector, cracker of an earnings performance from there. EBITDA has risen 90%. The margins have expanded to 13.9% versus 10% on a year-on-year basis. Stock holding up 1.5%. Although I must add that in the last quarter itself, you've seen some fabulous gains come in on the stock price for Mrs. Vector Food. Much in the larger scheme of FMCG names actually holding out. This also continues its uptick. Kunal, any trades that you're punching in? Mrs. Vector is one of the favorites, right?
Yeah, it still remains one of the favorites. Looks very attractive, and I think that the uptrend should continue for that stock. But other than that, large cap stocks is where I would probably keep an eye on, specifically Reliance Industries. 2460 approximately is where the stock is trading right now. So I think looks good for 2500, 2550 mark over the very near term.
All right, that's Reliance Industries. Lots of options to pick out for the day. What is it that you're looking at, Naresh?
So that would be a buy on HCL Tech. The stock is showing a lot of resilience compared to the Nifty IT index. Expecting it to break out about that 1140, 1150 mark.